options for people. And with that, I will introduce our next first speakers in the lineup to talk about capital stacking, kind of the foundations of getting started and getting your finances in order. That would be Dana and Max. Go to the next slide, please.
Hey everyone, nice to see you all here. This is Dan DeBoard. I'm a regional planner with Midcoast Council of Governments. I'm going to start off sort of just with the foundations here. Um, what is capital and what is capital stacking? Capital is a very broad term, but at least looking at it in the municipal sense, it describes anything that brings value to the owners, in this case, municipalities, value and benefit, building, machinery, financial assets, etc. And then capital stacking is referring to the different layers of funding resources that one would use in a town to fully finance a capital improvement. This could include loans, it could include grants, it could include bonds, accumulated reserves, all of these things that we're going to be talking about going forward. Laura, next, please. So capital improvement plan, or sometimes it's a capital investment plan, capital improvement program, all more or less the same thing. What is a capital improvement? Generally, when we're looking at capital improvements, we're thinking of major projects or constructions uh, and expenditures that are sort of outside the realm of your normal year-to-year operating expenses for a municipality. These are usually relatively large expenses. They're not ones that you would see every year, and they generally result in a fixed asset at the end. It could be like a new fire truck, a new ambulance, culvert replacement, a town dock or breakwater, uh, a community center, all kinds of things. And then why would you do a capital improvement plan? It helps towns have a multi-year look ahead instead of sort of just putting out fires from year to year with their budget. It identifies what their needs really are and helps hone in on priorities. It assures in instances with like vehicle maintenance, anything that needs to be routinely upgraded, that they are purchased according to a schedule. Often, say, ambulances would need to be upgraded every 7 or 8 years. A capital improvement plan can keep that in mind. It is just as valuable for informing the public of what the town sees ahead as far as expenditures, so you don't get angry residents knocking on the town office door saying, "Why are my taxes going up this year?" Well, you might still get that, but at least they will know why. Um, and it sets an ideal timeline that you can sort of check back in on as a town planner, as a town manager. You can look back on your capital improvement plan, much as you would, say, a comprehensive plan, and say, are we on track to pay for this piece at the right time? Have we purchased the new fire truck when we were supposed to, etc. Next slide, please. So getting started on a capital improvement plan, um, sort of to set the foundation, you want to inventory your assets as they exist now, as get your baseline of what assets you have, what assets you know you need from year to year, and um, what equipment you think you will need in the future if you don't have it now. Reviewing priorities that are identified in your current comprehensive plan, or potentially in your local or county hazard mitigation plan. And then as far as identifying additional expenditures that aren't currently assets that the town has, you can and should engage town officials, speak with other staffers, speak with local business owners, work with your comprehensive plan committee, and you can maybe even consider establishing uh, your own municipal committee, a capital improvement committee, or an economic development committee that is charged with sort of doing this exercise annually, or if it's a 5-year cycle, they're charged with undergoing the interview and engagement process. You would want to uh, sort of at the same time gather cost estimates that you can for major projects that you've identified in your inventory work and your uh, stakeholder interviews for setting priorities. And then you want to establish a realistic timeline with the thought in mind that often municipal projects are slower than you would like them to be. So if you absolutely have to have it done in 3 years, don't wait until year three, perhaps, to start on funding it. And then identify external sources of funding and come up with a local percentage that needs to be raised to fully fund each project. That will give you your local target and get you your sources of match to reach that full funding level for each project. Next slide, please. And finally, on capital improvement programs or plans, some resources, starting off with the State Planning Office and GPCOG uh, developed an excellent, I think, capital improvement program guide. This is an older document, but it's still, as evidenced by the fact that it was developed by the State Planning Office. But it's still definitely, in my mind, is an excellent one to work off of, a great resource. These links, you'll be able to click on them later if you'd like to check it out. And then two examples from a bigger town in our Midcoast region, Brunswick's capital improvement program. If you check out Brunswick's projects, they have a web page on their ongoing capital improvement program process. They're creating one currently for 2026 through 30. And then on the other end, you can look at a smaller municipality in our region, Rockport. They have past capital improvement plans that they've done posted on their website, so you can kind of see a finished project. So both good resources to check out. And I really liked this nifty photo on the right side that you can see from Brunswick. It really clearly lays out for the average taxpayer. This is what our existing debt is, what our currently authorized debt to take on is, what we propose in this capital improvement plan, and what projects would be in development, and how all of those work together to impact the tax rate in a given year. And having a graph like this really helps to, again, explain to voters what you're doing, why, and how it will impact them. And with that, on capital improvement programs and capital stacking, I'm going to hand it off to my colleague, Max Johnstone.
Thank you, Dan. I'm Max Johnstone. I'm with the Midcoast Council of Governments as their senior planner. Hope you're all having a great afternoon so far. Because we get to talk about the thing I always love talking about, and that's tax increment financing. Dan went over about the importance of having a capital improvement plan and strategizing on how to use these funds. But a lot of towns want to know, how can we start getting some money out of nowhere? Well, the TIF program is something that I always love trying to encourage towns to look into, because many have a great way of starting it. This isn't a new tool. This has been around in Maine since 1982, and in the United States, it's been around since the 1960s. What this program does is the town comes together and selects up to 2% of the land that is in the community and create a district. And that district is what the town will track any increases in value over a 30-year period. And as the taxes are being collected from those selected parcels, all the revenue that is from those 2% that is selected will stay in the town, and it specifically goes towards projects that are either in that district or for general economic development that is in your town. Now, usually when a town collects tax revenue and it doesn't have a TIF district, you actually will see a reduction in some of the tax revenue you get. You see on the left side of the slide there, it's just a general idea of what happens when the town gets their average annual tax revenue from residents. About 50% goes to the general fund, and then town will lose about 30% of it because there's a reduction in school subsidies that you get from the state. So you have to use that tax revenue to make it up. Same thing with county taxes. The value in the community has gone up, so now the county is going to tax that town a little bit more for its county taxes. And then municipal revenue sharing. The town will lose a little bit more in the municipal revenue sharing, which is made up from that tax revenue you just got. Now, if a town has a TIF district in place, that entire bar turns pretty much red. All of that revenue stays in the town for that 2% of land that you are going to get the tax increase in value and tax revenue from. And I'm only saying 50% gets lost, but I have seen some towns that go up to 70% in lost revenue because they do not have a TIF district and a huge development comes in that suddenly makes their entire town's valuation go out of whack. As I said, this is a program that lasts for about 30 years. The state does have some exceptions so that towns could have even more time, but that's under very special circumstances. And one of the myths that I hear towns say why they don't want to do a TIF is because they don't want to pay for legal counsel. I'm telling you, you don't need an attorney to, I'm sorry if there is an attorney here, but you do not need an attorney to do it. I might be biased because I'm from a regional council, but reach out to your regional councils. There is someone who's usually knowledgeable about TIFs in that organization, or there's a network of regional councils, so I'm probably going to get asked that question anyways. And I'm always glad to talk about it. A lot of regional councils love working with towns, especially on trying to get something like this or capital improvement in the works. So by all means, reach out to your regional councils, ask them more about the TIFs. And you may say, well, I'm a small town. Why should I do a TIF, or when should I do a TIF? You should always think about creating a district whenever there's a large development that's in the works in your community. If there is going to be a revaluation, which I know a lot of towns, you have to have zoning to do a TIF. You do not need zoning to do a TIF. I'm just seeing the questions that's coming along, Rachel. Hopefully that's all right. You do not need zoning to do a TIF. You could have zero zoning at all, other than the shoreline zoning, but you do not need any zoning whatsoever. But large developments in the works are always great to have when doing a TIF discussion. Reevaluation. There's a lot of towns that I've been hearing going through a reevaluation right now. So this is an ideal time for any of those towns to start talking about it. And even when a disaster has struck and there are damaged parcels that need to be rebuilt, that's surprisingly a good opportunity for some towns to get involved. And I'll explain that in the very next slide that Laura's about to get me to. So large developments, two examples that I have are in Warren, Maine and Brooks, Maine. Both of them are pending approval right now, but Warren has this massive solar farm that's in development, and Brooks has just finished the construction of a grocery store. And for both of these towns, they're very interested in using the fund to get emergency service vehicles. They're very interested in using some culverts to improve water flow and water quality improvements. Then in Waldoboro, they benefited greatly from a revaluation. I actually put that one together, and it was approved in 2019 for all these new industrial projects that were going to happen. But surprisingly, no one wanted to build in 2020. I don't know what was going on. But then a revaluation kicked in Waldoboro in 22, I believe. And suddenly the revenue has gone way past my original expectations and now brings in over $100,000 a year, which is being used for studies in the Madomic River to improve water quality, again, culvert replacements, but also preparing the town for other ways it can improve its working waterfronts. And then there is disaster striking. I'm sure those of you who paid attention, I think in the end of 2023, the general store unfortunately burned down in St. George. And the select board was very interested in working on creating a TIF district because right now the value of that parcel is at its lowest. It's just the land. So by creating a TIF district while reconstruction is underway, the town will actually be able to capture the entire value of that building if it is done before the construction's completed. Meanwhile, they get to use that funding and have it goes towards resiliency of the working waterfronts and again, purchasing an ambulance so that it can have some improved response to emergencies. And these aren't the only projects. I know I should probably talk more about resiliency, which is going to be in the next slide. It's a lot of great projects that towns are eligible for. Next slide. Now, the other big myth, sorry, I just see the question there. Plantations and unorganized territories may utilize TIFs as well. Yes. I believe for those, you actually have to get permission through the county, but anyone in the state of Maine can be creating a TIF district. So don't feel afraid to go out and ask those questions. The other myth that I hear from folks is that you have to give money back to the developer in order to create a TIF district. In the state of Maine, you do not need to give a penny back to those developers. Bless you, Rachel. Bless you again. I'm seeing her sneeze on the feed. Now, what is important is that the money goes back to projects that have some relation to economic development. Well, why am I talking about that in resiliency? Because that is a huge impact to Maine's economy, and that is what we are trying to preserve. So acquisition, engineering work, and development of land in a TIF district to further economic development, that can include making a parcel that is in the TIF district account for sea level rise or storm surges or any other impacts such as wildfires. Culverts and roadways improvements to help emergency services reach TIF districts. I've mentioned a few towns that are very interested in doing that, especially with how expensive culverts have become. And it's also a great way of fish passage and aquaculture related improvements. Environmental improvement projects to help commercial uses in the community. Communities that do have a sewer. If there are instances where it might overflow and it starts leaking into the nearby water body, which is used by working waterfronts or fishermen, that is an eligible use for your TIF district because you're trying to prevent a natural disaster from or a man-made disaster from happening. Trail maintenance and development to help promote tourism. Believe it or not, trail maintenance and work is an eligible project. It's been for a while. And then I've mentioned the public safety improvements. This includes even creating a brand new facility and buying the
I think Max just disappeared. Can someone confirm Max is gone?
I can't see him either.
Yeah.
Okay. Well, this is the last point on Max's last slide, but Max was saying,
sorry about that. I don't know what happened. I just got kicked out of it's that big TIF money that doesn't want me to speak on the matter. That's what's going on here.
You're giving away their secrets.
Yeah, I know. I'm letting everyone know how important and great TIFs are, and someone's trying to keep me silent on this. I'll try and be quick about it because I don't know what happened there. Public safety improvements, so equipment, vehicles, even the new facilities, all are eligible projects. All are eligible projects. There's even a lot more. Title 30A, subsection 5225 does go over the entire list. And as I said, I'm always happy if people want to talk to me about TIFs. I could go on for hours and hours on end. I do have other workshops that have gone over this in detail, but feel free to reach out if you ever have questions about TIFs. And hopefully I won't chat your ear off for so long that the internet kills my connection. So with that, I'm going to pass that on.
Actually, Max, you have a question from Darren in the chat. Do TIF funds have to be used for projects within the TIF district?
No, it is broken into, I think, 5 different categories. There is the one category where money goes back into the TIF district itself. So the very top project, acquisition, engineering, and development, that is something where it has to be in the TIF district itself. So for Waldoboro, I put their public landings and access points to the water. I put those in a TIF district so that those are now eligible to be used for TIF funding to make the improvements that I just mentioned. maybe a seawall related thing, having the landing raised a little bit, replacement of the concrete columns, those are all eligible. Meanwhile, you have the second category, which are improvements that lead to a TIF district, such as the culvert item or some public safety items. The culverts, it's an argument that you have to have public services reach your TIF district to help prevent it from burning to the ground or flooding or any other emergency from happening. So you got to improve those culverts. Same thing with extending source times. But category C is where it is any project. It doesn't matter if it's in town, doesn't matter if it's in the TIF district, anywhere in town. And that can include scholarship programs for students who want to learn trades that can include some more renewable or sustainable green jobs that are happening in the town. Again, I could go over the entire list, but I don't want to get cut off again.
We have one more question, Max. Is there a maximum size limit for the district?
Just to finish up for that, Rachel, Max's Title 30A statute, state statute 5225 has the whole breakdown of all of the various categories of TIF projects and what can be done within the district, outside the district, in a area leading to the district, and the town as a whole. So that will give you the full breakout.
Jay has to raise that question. Is there a maximum size limit? In most traditional TIF districts, the limit is 2% per TIF district, but you can create multiple TIF districts and it can total up to 5%. And then there are also downtown TIF districts that don't have those limits. But again, that is a huge conversation that I feel I'm already over my time with going over this. And I don't know if Big TIF is going to cut my internet connection again. So again, if you all have any questions about TIF, feel free to reach out afterwards. And if there are some questions that you don't feel I fully answered, you'll have my email. I can put something out with Rachel with the PowerPoint that goes out, but I always love talking about TIFs, but I drag on way too long.
Thank you, Max. Yes, if there's any more questions, you can ask them here. And if we have time at the end, we can also circle back to this topic. Max has done a workshop. It kind of alluded to this. Max has done a workshop. It's, I think, an hour and a half, really going into in-depth on TIFs. So if this is something that speaks to, we'll send that out after this session. That recording, and Max is available to talk to as well if you have questions. So with that, we would like to transition over talking a little bit from, what can you do inside of, in your town, to thinking about now receiving services outside. So we have some folks here from First National Bank that are talking about some municipal banking services and then a little bit about loans. So I wanted to welcome the three of you. You're welcome to, I think all three of you here today, you're welcome to take your video off and unmute yourself, and I'll let you get started.
Thank you.
Okay,
Thank you. We all three are here, and I am Nikki Kimball, and I am Senior Vice President and Commercial Loan Officer at First National Bank. And here with me is Monique McRae. She is our Assistant Vice President and Branch Manager here in our Wiscasset office. She's going to go over a bunch of our deposit account options as well as electronic banking services. And Patty Guara is here with us. She's a commercial loan portfolio manager and vice president. She specializes in municipal banking. Patty and I are going to go over all of the different loan and other resources that we can provide on that side of the bank. As far as loans go, municipalities often will look to its bank to borrow money. And it's a very important aspect of what we as the bank does, as it is, it supports the economies of the communities that we serve. And so we have branches in Lincoln, Knox, Hancock, Penobscot, and Washington counties, but we serve all of Maine. So it's surrounding those communities. And one of the key things is that the governmental unit must be a tax exempt municipality. And we do financing up to $10 million per year for different projects. And I'll go over different services and products that we have. But first, I'd like to just kind of have Monique go over the deposit services that we offer.
Hi, as Nikki said, I'm Monique McCray, and I've been with First National Bank here in Wiscasset for 20 years on the retail side. I'll go over.
Laura, could you advance, please?
Yes, thank you.
Oh, are we all set?
Just say next when you want us to advance your slides.
Oh, okay. It's so tiny on our end
And
that we
probably one more too.
Yeah. Thank you, Patty. There we go. So on the municipal deposit services, I won't go down through every single one of them, but as you can see that we have insured cash sweeps, certificate of deposits, which are considered CDARs, municipal now checking accounts, certificate of deposit, which are right on our books, municipal savings accounts. We offer a full range of all these services. And by putting your municipal dollars with First National Bank, your dollars are insured, your funds are insured dollar for dollar through our portfolio investments. We offer preferred rates on all of these. As of today, our municipal bank, municipal now checking account is paying 3.6. That can change any day. Not a bad rate. And on certificate of deposits, it could be a little bit more depending on the term and the time. I know that we offer all of these, and if any of you have questions, we have 18 branches across the state of Maine with many professionals just waiting to answer any of your questions. So if there is any questions at the end, we'll take those. As far as if you want to advance to the next screen, I think we're going to be one out of line. Nope, there it is right there. I'm going to talk, these aren't your normal just deposit accounts, and these are a little bit more of our electronic services that we offer. As far as merchant credit card processing, that's the convenience of industry-leading credit card processing with our legendary customer service and competitive rates. We really can sell that product, and everybody is using debit cards and credit cards these days. Payroll services, we offer a full range of payroll services. Leave the work to us. Our partnership with Action Payroll offers fully paperless payroll with full compliance to all state and federal regulations while offering great rates and local customer service. Positive Pay is a new one, but it's a very important new one on electronic services these days. And that's to take control of your checkbook. Approved checks clearing through your municipal account to help prevent fraud. We have sold that over and over. That's a really great product. Certificate of deposits, we spoke about that earlier. And remote deposit capture, that's where it's almost like being your own banking associate, where if you are a high-end check receiving municipality, we offer a scanner and you scan your own checks right into the account. It's electronically goes right into your checking account in a quick moment. As far as automated clearinghouse, which is ACH, electronically pay your employees, vendors, or collect dues from your clients using ACH and First Online Banking. And as far as wires go, that is, you can use wires to send domestic funds using our First Online Banking. We offer multiple layers of control and security to make it as easy and safe as possible for your municipalities. We are a full service bank. We offer all of these electronic services with experts in these departments. So as being on a retail side, I don't have to know every little ins and outs about it, but I can certainly refer you to our experts in each of these fields. And with that, I'll turn it over to Nikki.
Yes. And so I had mentioned briefly at the beginning that we offer a variety of different vehicles to be able to get resources and funding. And Patty's going to talk to you now about the tax anticipation note and the bond anticipation notes. And then after, I'll go over the line of credits and grant anticipation notes.
I have the easy part.
Thank you, Nikki. And before I get into that, I do want to just kind of piggyback on a little bit of what Monique was talking about. A lot of our electronic services and those additional services such as payroll and some others. Our technology vendors are located in other areas, so that if there is, when we're talking about resiliency and you want to make sure that you're able to pay your municipal employees, that can just continue on uninterrupted. So partnering with somebody who can offer those types of services, that there is resiliency and kind of business continuity built in, is very important. In addition to that, so tax or bond anticipation notes, your tax revenue, obviously that's where, how you guys get a lot of your money to do these projects. And so these are generally a 1-year term. It's a line of commitment, which means it's a single draw line of credit. And it's used in anticipation of you receiving your either semi-annually, quarterly, or annual tax income. And you would use those funds to pay this back at the end of the year. It's really that simple, I think. Nick, do you want to?
Yes, and so the bond anticipation notes are basically repaid from future long-term bond issue. And usually they are requested for community infrastructure projects like roads, bridges, schools, and they're tied to when you think the bonding will occur as far as term goes. And so the maturity of that bond anticipation note will correspond with that. So some of the municipalities that we serve include school districts and whatnot. And so a lot of times the school districts or regional school unions, they need short-term funds. And basically they utilize that with a line of credit, which basically requires one annual payment, and with the major source of those being assessments to the towns by the SAD or the RSU. And then we have grant anticipation loans, and these are repaid from federal and state grants. So sewer departments are oftentimes a typical borrower for these types of loans, like if they're going to extend the sewer lines or repair sewer lines and things of that nature. And then we also have equipment term loans, and these are for more smaller specific types of purchases like trucks, school buses, road construction equipment. And those terms generally vary between 3 to 10 years, and repayment are generally from annual appropriations of the municipal operating budget. So in a nutshell, those are what we are offering as far as municipal lending goes. And we definitely do try to be very competitive with our rates and terms, very flexible to meet whatever needs the municipality has. And forgive me here, I think I heard a ding here. I'm trying to see if I can get the question here. Is there a minimum size limit for the district? No, there is not a minimum size district, but it does just need to be a tax exempt municipality, and our maximum loan amount to that municipality is 10 million per year. Did I answer that okay?
I think that was for the last section, but
oh, okay.
It
was
oh, okay. All right. Well, hey, a little additional information for you.
It was very good. Thank you.
Absolutely.
We are coming up. Does anyone have any questions right now about loan opportunities, especially for First National Bank, since you have some people here right now? I'll give a few seconds in case anyone has questions.
And if you think of anything after the workshop today, we're happy to answer questions at any time.
Yes, thank you. We have everyone's contact information at the end of the presentation, so people can take down contact information, and we'll also send that out. So, after this presentation, everyone will have contacts.
Great.
Thank you.
Thank you.
With that, we're going to move on to some state programs that we've talked a lot about for example, land acquisition, conservation, and keeping development out of, high hazard areas. So we have a speaker here today from Land for Maine's Future, Laura Graham, just to talk about the Land for Maine's Future, which is a funding program to help with land acquisition. Laura,
thank you, Rachel. Thank you very much, Rachel. Yes, if a land acquisition is a part of your strategy for hazard resilience, then I hope you will think about Land for Maine's Future. We are the state of Maine's primary funding program for natural and working lands, both. And you see my contact information there. If you have any question, any hint of a question that a thing you're contemplating might be eligible for grant funding, please email me. I love to tell people about how it might work. And I like to problem solve alongside when I can, brainstorm. Next slide, please. So we have 4 basic programs in Land for Maine's Future. The first of them is conservation and recreation. This is the one I think everyone thinks about. It does just as it says here. This is the one, this was the first of our programs. This was sort of why we were originally born. And you'll note that it includes community forests for municipalities and governmental leaders. This is probably the #1 form that this funding takes. Town forests are very popular, but it's not limited to that. It is, and they can be fee simple direct title acquisitions, or they can be if the town conveys a conservation easement, for example. This is a picture of the road up to the path up to Jockey Cap in the town of Freiburg. The town of Freiburg in this instance partnered with Upper Saco Valley Land Trust to the town used our funds to acquire the land, and they conveyed a conservation easement to the land trust to manage the land so that the town wasn't burdened by the significant responsibility involved in stewarding conservation lands. So that's the first program. Next slide, please. The next most common for municipalities is this Public Access to Maine Waters Fund, also known as just water access funding. It is not always about a boat launch. It's about getting people to the water in any way. We love access to our water here in Maine, and it can involve access to a water view sometimes. It can be a pretty broad understanding. These are typically small size parcels, and they can be used for both. They can be used for commercial use, so long as that commercial use doesn't displace the general public from access to these recreational facilities. So you might think along the coast of areas that would be useful for clamming, for example. And so that's another really big. And the thing about this program is that it's on a rolling basis. Our conservation and recreation program and the next 2 I'm going to tell you about, those are all on a scheduled basis. This one, water access, is a rolling program. So you just email me with an idea, and we may be able to get you in front of the board. I also should say, before I go further, that Land for Maine's Future is a state funder, which means that you can match federal funds to Land for Maine's Future. We're really comfortable matches for a lot of different funders. Next slide, please. Working farmland. This is not one I could find any examples of. I can find any examples of a municipality being the owner of the farmland, but theoretically it would be possible, I suppose. But this is for the purpose of protecting very important agricultural lands and agricultural soils. Next slide, please. And the last funding category is working waterfront, very much in the news. And this is one here. This is the town wharf in Beals. This is a municipality applicant. This municipality, this town wharf, also supplies space for the working waterfront, which makes it eligible for this funding. Working waterfront program funding and water access program funding have some potential areas of overlap. And one of the things we could talk about, if you have a project in mind, is which would be the better fit for you. And that is the last of what I have to say. Rachel, Did I forget anything that you told me? Don't forget to do this. It's so important.
No, that was great, Laura. Thank you. I have a question. Maybe you can, hopefully you can answer. So is there any benefit to, so for example, with the working waterfront, when you have a private property and you transfer now into public ownership through, say, the municipality or, you know, a local government, is there a benefit? You know, does that open you up to other funding opportunities to help with repair and resilience?
Well, it does. Well, yes, potentially, because we don't lend funding to private citizens for water access, for example. All of our programs except the working waterfront require what we call cooperating entities to be the fee holder, the title holder, which means either a town or a land trust for simplicity's sake. For waterfront, we work directly with our commercial fishermen. So towns can, but they don't have to be. If you've got the town has title, they have access to the other programs. If it's a private interest, working waterfront is the only one that we can fund as a private interest directly. Our working farmland is similar, except that we, again, don't work directly with the farmers. We work with the land trust, who is in the intermediary there. So does that answer your question, Rachel?
Yeah, it does. Thank
Good.
you.
Good, thank you.
Just open it up too. If folks have questions, I know Laura gave a pretty high level overview, given, I know we're running a tight ship today,
Hoping for questions. I'd rather answer questions than just blather on.
Well, I could listen to you talk about land acquisition for a very long car ride across the coast of Maine, like we've done before. But
we have done so. That's true. So thank you very much, Rachel. Thank you for this opportunity.
Yes. With that, if folks do come up with those questions, you're welcome to add them into the chat. If you have any questions right now, we'll transition into our next speaker, Sue Baker, who's here from the Floodplain Management Program. So I'm really excited, Sue. We have talked a lot about floodplain management throughout this series, about flood resilience, and even last session, our zoning and model ordinance session, we talked a little bit about model zoning ordinances and a little bit about the community rating system, but Sue's here to, as you know, the real subject matter expert, and I'm so excited to have you, Sue. Thank you.
All right, thanks, Rachel. So we'll dive right into the next slide. And the first thing I'm going to do is just give a couple of background slides just for how the National Flood Insurance Program works and why it was created. So the real effect of what Congress was trying to do here was to be able to reduce the risk to improve property and loss of life during flooding events, reduce the amount of disaster assistance that's paid out after flooding events, make flood insurance available to those who are at risk, and to require development standards for building and improving in flood-prone areas so that hopefully we can break the cycle of having a flood, damage, and then, you know, recovery and then going all over again. Next. So I just want everyone, communities, to understand how the pieces of the program fit together. FEMA generally maps the community with flood insurance rate maps, and those areas are the areas that have a 1% annual chance flood. The zones start with either an A or a V, and we find V zones or velocity zones on the coast. The maps are the foundation for where local floodplain management permitting needs to happen. And the floodplain management ordinance regulations are adopted locally, and they need to meet the minimum standards for both the national and state requirements. And because the community participates in the floodplain, in the NFIP, by adopting a local land use ordinance, that's the mechanism that actually makes federally backed flood insurance available within the community. Next. So quickly about the local regulations, the FEMA and the National Flood Insurance Program underwrite flood insurance in communities that adopt and enforce compliant regulations. These regulations ensure that buildings and other development will be protected from the flood levels shown on the map. And at this point in time, I'd like to point out, with all the talking about resilience that we have been doing, this is probably not enough for just this area. So over time, the goal is that the exposure to the hazard would be reduced as older buildings and buildings that are substantially improved, which is 50% or more of the building value, that will help. And any building that is improved or damaged by 50% or more must now meet the elevation requirement in the ordinance. And for most communities, that is 1 foot above the base flood elevation. We do have several coastal communities that now require 2 feet, and just a couple that require 3 feet. Next. So what I really want to talk to you today is about flood insurance, and then we'll talk just a little bit about the community rating system. Most every building in a participating community is eligible for flood insurance, even buildings that are outside of the mapped flood hazard area. So that's one of the common questions that we get. You do not have to be in the mapped flood hazard area in order to get flood insurance. And so when we talk about flood insurance, we are generally talking about individual building owners, not necessarily the community. So building and contents coverage are both available, and contents coverage is available for renters that may be renting in a building that's located in the flood hazard area. Condo association for insurance and individual condo unit can both get 2 different kinds of coverage. The condo association can get coverage for the common areas, while the actual unit owners can get insurance for the particular unit. And one of the exceptions to the flood insurance rule is that buildings that are new or substantially improved that are completely over water are generally ineligible for flood insurance coverage. So unfortunately, that is many of our functionally dependent uses. Next. So just to get an idea how much coverage is available for single family and other residential units, building coverage of up to $250,000 is available, with contents being at $100,000 and $100,000 of contents for renters. Non-residential, which also includes commercial, building coverage is $500,000 and contents is limited to $500,000. Next. So what I really want to say is the meat and potatoes of the flood insurance coverage is something called increased cost of compliance, which is a standard part of all flood insurance policies. And what it does is it covers expenses above and beyond physical damage sustained to repair or rebuild a flood damaged building in compliance with state or local floodplain management ordinances. So the caveat here is that the building must be declared substantially damaged. So that's damage incurred of 50% or more of the building value only. And since the community is the responsible permitting authority, they are the ones who are responsible for declaring a building substantially damaged. So what ICC does is it pays up to an additional $30,000 above and beyond the building claim towards the cost of acceptable mitigation measures. So those can include elevation for a residential building, dry flood proofing for non-residential, relocation, demo, or any combination. So if somebody wants to relocate the building somewhere else on the property and elevate, something like that would be acceptable. Next. So for questions about flood insurance, or all things, before and after floods, how much it may cost, please visit floodsmart.gov. That is an official website for flood insurance through the NFIP. So there are lots and lots of good things, and that's where I would tell a property owner to look first if they are interested in knowing their risk and potentially purchasing flood insurance. Next, I also wanted to take a couple of minutes to mention that the notice of funding opportunity for the hazard mitigation assistance and the BRIC grants was recently released. We got a message last week in that we specifically handled the grants here at the Floodplain Management Program. Rather, that is a function of the Maine Emergency Management Agency. So Christine Whelan is our State Hazard Mitigation Officer now, and she has all the details, questions, anything that you want to know about grants. Those should be directed to her over at MEMA. The application deadline to get proposals or projects to MEMA is March 7th by 5 p.m. And you can also visit the MEMA website for more information on grants and what they are eligible to do. Next. And lastly, I want to take just a few minutes to talk a little bit about the community rating system and the discounts that are available. So what the CRS program is a voluntary incentive program for communities that participate in the NFIP. And if a community participates, that can afford flood insurance premium discounts to individual property holders. What do I want to say? Not property holders. Insurance policy holders. Thank you. And CRS discounts apply uniformly across the community with just a little bit of exceptions. Next. So this program is actually rewards communities for adopting and implementing higher standards. There are 19 eligible activities that can get various amounts of credit. They are in 4 major categories as shown on the bottom of the slide. And although the community is the one that participate, it is insurance policy holders that actually reap the discounts. So any community that participates in the NFIP is automatically a class 10. Every 500 points that a community accumulates for these various activities can up the discount. So a class 9 is 5% discount, 8 is 10, and it goes on through that. Next. I was also asked just to say a few words if someone is, if a community is interested in participating in the community rating system. CRSresources.org is your go-to website for that. Next. So what you would want to do as the community is to download the 2017 manual and the 2021 addendum. You should review section 110, which is a basic overview of CRS. Section 200 has the procedures for applying and activities. Section 240 is a self-assessment. So any community interested in CRS must do a self-assessment and send a letter of interest to the FEMA regional office. And very importantly is once the community has applied, they must successfully pass a community assistance visit from FEMA. So that means either having no NFIP violations in your communities or remedying any violations that are existing before they will let you participate in CIS. And last slide, please. Your CRS contacts, communities can contact certainly me or Janet for basic questions about the NFIP. We have a new CRS field representative, Sarah Martin, and then for the FEMA regional office, John Grace is currently our CRS coordinator. So with that, I am all done for today.
Thanks, Sue. I don't think we'll be done with flooding, unfortunately, but
I know, unfortunately.
if folks have questions, you're welcome to send them in the chat. For now, we're going to transition over to some grants that you might not be aware of. We figured, there's some that you probably hear about a lot. So with that, David.
All right. Good afternoon, everyone. My name is David Ludwig. I'm a senior climate planner with the Department of Agriculture, Conservation, and Forestry. And I'm going to be touching on a few slightly lesser known grant opportunities today, but ones you might still be interested in taking advantage of. Next slide, please. The first thing that I want to introduce is a community wildfire protection plan. This will be relevant in a moment. CWPP uses on-the-ground assessments and data from remote sensing as well, typically, to determine a community's risk from wildfire. Considers a lot of factors such as vegetation, topography, the area's weather, how much vegetation is around structures, and other things like that. And it provides recommendations for addressing fire risk through fuels treatments, improving defensible space around structures, and things like that. And we have covered some of those topics in previous webinars in this series. Next slide, please. There's a federal program that's open right now called the Community Wildfire Defense Grant, or CWDG. It's a grant from the USDA Forest Service, can be used for a community to develop a CWPP or revise one that's more than 5 years old. You could receive up to $250,000 per award for that work, or you could implement projects described in a CWPP less than 10 years old. Up to $10 million per award are available for implementation, but you must have a current, and that means less than 10 years old, CWPP adopted by our community before you would be eligible for the implementation funding. Eligible entities that could apply would include local or tribal governments, nonprofits like lake or homeowners associations, and state forestry agencies. Next slide, please. The current applications are due February 28th, 2025, so you have a little bit of time. Communities need to meet certain baseline eligibility requirements, and that means that you have to be considered at risk of wildfire, according to the U.S. Forest Service. They maintain a list of eligible communities on their website. I've placed a link to that there. If you tried to pursue this grant before and you weren't eligible last time, I wanted to make you aware that eligibility has changed for the third round. If you would have been eligible for the last round, you still are, but they added some new communities that were not eligible before that are now. So definitely check back again if you're interested. Priority is given to communities that can demonstrate high wildfire hazard potential, have low income, and have been impacted by a severe disaster within the last 10 years that increases fire risk. And that doesn't have to be a disaster declared because of a past wildfire. For example, in the past, we were able to meet that criterion in applications by arguing that some of our coastal storms resulted in a lot of dead and down timber, and that increased fire risk, and we were able to get points for that. So you definitely could try that approach as well. Next slide, please. This is a very competitive program. In the second round, only about 30% of applicants received awards. 100% of projects that were awarded met the high or very high wildfire hazard criterion, and 72% of potential, successful applicants met all three priority criteria. So having community support is important. There's no point in creating a CWPP if no one in your town is on board. You'd want to get the support of your select board, your fire chief, other local leaders who might be applicable in your community. If you have questions about your project idea, you can contact the Maine Forest Service for technical assistance. I wanted to make a side note that the USDA Forest Service, which is a federal agency, determines successful grant applicants. So the Maine Forest Service can help you, but they're not the ones who are actually determining who gets awarded. And I also wanted to note to not be discouraged if your community doesn't meet the high or very high hazard criteria from the federal tool. You can still work with the Maine Forest Service to do a local risk assessment that might be able to get you credit for that. So definitely reach out to the Maine Forest Service with the contact info I'll share at the end. Next slide, please. Wanted to draw attention. We've had 2 projects funded in the second round from this program. We're now on to the third round. 5 total rounds of funding are planned to be made available right now, although everyone knows we do have a new administration and a new Congress coming in, so it may be subject to change in the future. So if you think you might be interested, I would highly recommend applying for this current round that's open right now. Next slide, please. This has some contact information and information about the program that we will share with you again after the presentation that you can refer back to. Next slide, please. This is another program. This is Fire Protection Engineers Fire Service Grant Program. This is a private grant. If the CWDG seems a little bit too big or daunting at first, this might be a smaller program to help you get started and build a little bit momentum in your communities. Eligible entities include local governments and fire districts. You can use funds from this program to begin fire prevention and preparedness programs by purchasing digital equipment or funding community outreach and education or funding arson prevention and fire investigation programs. These are usually small dollar grants from about $1,000 to $3,000. Applications are due at the end of the month, and I've included a link for more information. Next slide, please. Next up, we have Project Canopy, which can be used to fund urban forestry projects. Eligible entities include local governments, tribal organizations, educational institutions, and nonprofits. Typically, these grants open up in the late winter or in the spring. This program is also funded by the USDA, but it is administered through the Maine Forest Service. Next slide, please. There are 3 categories of Project Canopy grants, planning and education and planting and maintenance. You can read the criteria for each on the slide. Both of those have statewide eligibility. And then the third kind of wild card is Inflation Reduction Act, Urban and Community Forestry grants. This was funded to a grant directly to the Maine Forest Service, which is now being used to create these larger sub-grants than they have been able to award in the past. So maximum award size for these grants is much larger, potentially up to $200,000 per award, but there are some eligibility requirements. Maine Forest Service has a map on their website showing which communities or census tracts in Maine are eligible to apply. And these can fund a variety of work, including work that would otherwise be covered by planning or planting and maintenance grants. Next slide, please. I've also included links and contact information if you're interested in learning more about this program. And next slide, please. Finally, we have the Nature Conservancy, TNC's Resilient and Connected Appalachians Grant Program. If you think, oh, we're not really eligible, we're not technically Appalachia, the TNC is very, very generous in terms of their geographical definition of what they consider to be Appalachia. So the highlighted portions of the state included by the red line are generally eligible for this program. So that's most of the state except for southern Maine and the western mid-coast. Priority is given to TNC's quote-unquote focus areas, which you'd be able to view following that link to the interactive map that I've placed on the slide. This grant can fund fee or easement acquisitions and associated costs, and it would be a good opportunity to consider stacking or matching funds like Laura was alluding to earlier between state, federal, and private dollars if you need to make some combination thereof to cover your expenses. This is another good option. Eligible entities include nonprofits, municipalities, federally recognized tribes, and state or local agencies with a maximum award of $100,000 per grant. I have provided some links for some more information there, along with some contacts. And with that, unless there are any questions, I will conclude my portion of the presentation.
Thank you, David. If folks have questions, you're welcome to send them in the chat. If you want to speak up, you're also welcome to. Otherwise, Laura, would you be able to get to the next slide? Sue said this information for the most part. Just wanted to reiterate, MEMA, Maine Emergency Management Agency, is hosting open office hours starting this Wednesday. So, and we have some recordings that the past hazard mitigation officer, Heather Dumais, did with Lincoln County Regional Planning Commission. We'll send those out after today's workshop, since those have been covered recently. But otherwise, we're actually going to transition over to, we have a guest speaker today from Monhegan Island, Thomas McClellan, and thanks, Laura. So Thomas is here to talk a little bit about kind of this pulling all these topics together of capital stacking, and I'll let them take over.
Hi all, thank you for coming. These resources have been super helpful and it's been great. My name is Thomas McClellan. I'm an Island Institute Fellow on Monhegan Island. And thank you, Rachel. I've been with the Institute for only 5 months, so I'm new here, but I'm managing Monhegan's waterfront infrastructure projects and grants. I couldn't decide how to title the presentation, so here goes. There's a few options. First, we have, wow, it feels like we are out on the island, grappling with municipal financing challenges. Next, please. Or it takes a plantation, one small island trying to accomplish one big project. Next again. And third time's the charm. Monhegan's Island centraling efforts for life, liberty, and the pursuit of lobster. We could try one more. Or Monhegan Reserve Funds, January 2025, a Monhegan Island plantation presentation. And next, please. So as islanders, we are in the Gulf of Maine, and we're facing significant challenges, many of them caused and exacerbated by climate change. But Monhegan, in some ways, is lucky. There's a high proportion of community leaders relative to the population of the island. And we've had recent success with the completion of the broadband project on island, and we're ready to keep up the momentum while starting a new municipal challenge. We're lucky that we have our local economic development and planning organization, the Lincoln County Regional Planning Commission. They help us manage and complete these grants. And then today I'm going to go over our scenario, the past grants, and the path we're taking forward, and also how much money we need. There'll be plenty of time for questions at the end. And next, please. So for reference, Monhegan Island is located about 8 miles off the coast. It's 44 miles east of Portland and 12 miles southwest of Port Clyde. You can go next there. And we currently have 60 year-round residents based off the 2020 census, with roughly 1,000 summer residents. And these numbers fluctuate based off the weather. Next, please. So, like the plantation structure, to clarify what it is, it's like a minor civil division, rather a mix between like an unincorporated area and a town. We have the same power as a town, and we have the ability to work with like the Land Use Planning Commission and like the other countywide planning commissions as well. There's a board of assessors, a town admin, clerk, fire chief, and a constable. Thank you. Next. So what have we done in the past? And next, please. In 2019, we conducted a resiliency study of Monhegan Plantation's Main Street corridor and breakwater. In 2023, we conducted a Monhegan Public Wharf Condition and Resiliency Assessment, which was used to inform my position here. And next, please. More recently, we received the Shore and Harbor Planning Grant for like $50,000 in 2024. And a portion of that is which is funding my fellowship. And this is administered through the Maine Coastal Program. And just this past December, we submitted a grant application for about $75,000 to the Community Action Grant, which is through the Community Resilience Partnership and out of like the Governor's Office of Policy, Innovation, and the Future. And next, thank you. So for today, like our waterfront is the main subject of conversation, and our wharf is our nexus here, and that's extending northwest towards Manana Island, and sees most of our foot traffic. Go next there. Rough estimates are about 80,000 visitors come to the island in the summer, and all the inns, hotels, retail businesses, contractors, residents, and visitors use the wharf. It's exposed from the south and most accessible via ferry or lobster boat, just next to Smutty Nose there. And next, please. Thank you. And so the breakwater is the other piece. It only protects a small portion of our waterfront and has a history of experiencing damage during winter storms, when it's needed the most to deter any inclement weather. And that small breakwater protects the only access point for utility vehicle transport, road maintenance equipment, waste removal, and fire equipment. It was redesigned by the Army Corps of Engineers in 1962. That design was never officially implemented by them. And we can go to the next slide as well. Thank you. So, yeah, the breakwater. Let's go to the next one as well. It only protects a small portion of the harbor, but of course the harbor is unenclosed from the south and provides insufficient protection with any like southerly or southwesterly swell. And it's overtopped in most storm conditions. We have a nice little video here. And I apologize about the if it's a bit laggy. There's our breakwater and one of the coastal homes that's right behind it. And this video is from the last January's winter storms. Should be it right there. So, and you can go to the next slide. Thank you. So, I know there's a lot of language that's going around that the storms are unprecedented, which they are, but these waterfront issues for us have been a consistent issue for over a century. They've been hard to tackle, and they've persisted since about 1880. The cases were reviewed in 1880, 1889, 1915, 30, 32, 35, 39, 40, 78, and now again in 2024. At each time in the past, building a new breakwater has been deemed like cost prohibitive, but the driving issues haven't changed. And you can go to the next slide as well. So the existing breakwater, it was subject to like improvement requests that I just put in the last slide, with a history of congressional requests, and then a memorandum in the 70s that reiterated our case, but there's still no official designed breakwater. The one you saw in the video is like the Plan B 1940 report there that was not recommended by the Army Corps of Engineers. And next slide, if possible. So at a glance, the challenges have lasted for over 100 years. The Army Corps memorandum that predicted like the registered fishing community would decrease in size, which it has. It's dropped from 15 to 7 registered fishermen. And not only for the fishing community, but the harbor and the breakwater it's central to all aspects of island life, where like no businesses or municipal service would function without some sort of access to the island. Even the pilots who used to bring tankers and ships into Penobscot Bay are no longer based on the island because of the inconsistent protection, and even the Coast Guard left in the mid-80s. Finally, like the town dock, shoreside residences, and the fishing shacks are still getting damaged. And we can go next. So what has changed? For context, this is the Wharf on Trap Day, which is the opening of the lobster season. We can go one more slide. Thank you. In 2023, the assessors recognized the need to raise funds. So they raised $25,000 from taxation and moved another $25,000 to the Wharf's long-term maintenance fund, knowing that the funds would be necessary to use as community match funding for most of the grants that we've learned about today, and the ones that we've considered so far. Additionally, the problems to the breakwater have persisted, and like the external funding is like the only substantial option for any lasting change. And the plantation does not require outside funding. The reserve account would be a major contribution towards a self-funded project. And we're making steps towards requesting another Army Corps of Engineers survey and applying for earmarks, yet the community is still going to have to get a bit more creative. There's now $50,000 in the Wharf Reserve and $25,000 in the Breakwater Reserve Fund. And so the big question is like, how do we actually create these? You can go to the next slide. Thank you. The plantation, it was pretty straightforward. In 2023, this is the first year they did that. They did it again in 2024. They moved reserve accounts, knowing that the wharf and breakwater would need to be repaired, not realizing that the 2024 storms were imminent. The assessors just had to motion to create a reserve fund. And then once they were passed by the Board of Assessors, we were able to create a floating fund. And now we have the agency to contribute those funds towards any grants, like the Shore and Harbor Planning Grant. And it was a pretty straightforward process. And you can go next slide. So where do we go from here? We don't really want to recreate the past and attempt to engage the Army Corps again to no avail, but we likely will. And now another generation of island leadership is making this effort to protect the harbor and the island's well-being. So we have external support from our planning commissions, and now these resources are incredibly valuable, so we can have creative financial tools at our disposal. Yeah, and that's our case. And we are now navigating where do we go from here. And so thank you all for your time, and I'm looking forward to talking further. Please ask any questions, and thank you for listening.
Thank you, Thomas. If folks have questions, now would be a really great time for Thomas or for other speakers that were here today. But if you're thinking about reserve account and thinking about, getting the public on board with spending that was a good example of it. Thank you, Thomas. And I wonder too, the population's small, so you might have I know you're 5 months in, but I actually have a question. Well, maybe people might get their thinking caps on. When the community gets together, do people that are seasonal residents get involved often, or are there a lot of meetings that happen throughout the year that, are when seasonal residents aren't around? So just wondering maybe like how do you engage seasonal residents?
Yeah, that's a great question. There are like monthly assessors meetings which are open to the public, and that's just a Zoom link. I mean, it works best because even the year-round residents often can't get back to the island because of the inconsistent ferry schedule, and so Zoom has seemed to work best for the assessors. And when motions like this are put forward, they're voted on annually. So you have time every month to make a change like this.
Thanks.
Hi, David.
Hi. Quick question. I'm sorry if you touched on this and I missed it, but as far as the reserve account goes, does the community envision that just being used as matching funding to try and leverage some kind of external funding? Or if that doesn't work, do they think they'll ever be able to get to the point where they'd be able to self-fund some of the work that's needed using the reserve account?
That's a great question. I think for now, our plan is to use that as match funding. I'm not sure how what everyone's familiarity is with like larger like municipal projects, but like our price tags, we're looking on the scale of like, millions, about like 7 to 8 million for just say, rebuilding the wharf. And so our best bet will be to use this as matching funding for smaller grants. But I mean, perhaps we can take out a loan with First National Bank.
On that, I'm curious what funding you guys are pursuing, like what grants.
Oh, yeah.
Thomas, you're muted. I know you might have to. Yeah, thanks.
Okay, sorry about that. So like we are pursuing like a Section 107 grant, which is through the Army Corps of Engineers. And that would do a feasibility study that could potentially like pay for the whole project. And I think that has a similar price tag to the First National Bank's kind of max allotted number of like $10 million, which is likely how much one of these projects would cost to either rebuild our wharf or build a new breakwater. And there is also the option of like earmarks or like commercially delegated spending. So we have to be kind of creative there.
Thomas, didn't you mention that you've been meeting with, and this might be I mentioned this because this might be a resource to for other people to take note of. Haven't you met with or are going to meet with someone from the New England Environmental Finance Center?
We are meeting with Chloe Shields this week actually. And they are, I'm not sure like where the conversation will go, but they spoke at the CCAT meeting this past fall. And Rachel, I think if you could share their contact information, that would be awesome.
Yes, that is in our list of resources to go out. The New England Environmental Finance Center has a few recorded workshops on grant writing, grant management, and many other resources on top of that. So we'll send that out to folks. But just nice to know the people that you're reaching out to or connecting with or meeting and being advised from. Do any other folks from the audience have questions? Okay, I think I gave the 7 seconds needed of awkward silence to determine that there's no questions. So with that, thank you all for coming today. And hopefully there's something new you learned that you might not for. This is you'll get an email from me that with the recording and also the PowerPoint slides, so you can access any links or resources. Also send a resource document out. You'll have contact information for presenters, but also with maybe some other workshops or recorded webinars on other funding sources that we are aware of. So we didn't cover them today because we know they're recorded elsewhere. And lastly, this is our last scheduled workshop, but we're actually really excited. We're planning for February a session on infrastructure and nature-based strategies, which was highly requested when we first started this series. So you'll be hearing from us with a date, a save the date and registration for that one. So in the meantime, thank you all. And I hope you have a good evening. Goodbye.
Thank you.
Thank you.